Hello and welcome to another episode of Pakistonomy. My name is Uzair Yunus, and today we're going to be talking about Pakistan's startup ecosystem and whether this is the end of the boom in the startup ecosystem. We've had two very negative stories over the last 10 days or so, starting with the spectacular collapse of Airlift, the poster child, so to speak, of Pakistan's startup ecosystem in a way, and the startup basically said that it's wrapping up its operations because it just couldn't get to the next funding round. And just a couple of days ago, to me at least, the worst case scenario was realized, which is fraud in the startup ecosystem. We've had a story about Tag sort of disclosing or being disclosed that Tag's founders, etc., were engaged in fraud, and the State Bank of Pakistan sort of, took notice, etc. And that is the story of the day as well. So two big stories. Tag also raised at $100 million valuation, and that casts a cloud on the ecosystem as a whole, especially at a time when global liquidity is drying up around the world. And it must be noted that this froth is not unique to Pakistan. This weak due diligence is not unique to Pakistan. It's just that it's come at the worst time for the country and the startup ecosystem. So to talk about this, I have the honor of hosting Ali Farid Khwaja. He's chairman of KTrade Securities and has over a decade-long experience in capital markets and the technology sector. So Ali, thank you for taking out the time today. And you've been around the block for long enough to know this is not the first run around this, doomsday scenario. But let's start by hearing your perspective on Airlift, the startup ecosystem, and what's been the impact of these two big negative stories in the last 10 days or so.
Thank you, Uzair. It's a pleasure to be on your podcast. And yes, as you said that, and you wrote an article about it as well, that winter is truly here in the startup ecosystem. And while tragic and sad, I don't think it's unexpected. I think that there was very little due diligence. There was over exuberance, and a lot of these business models were based on the assumption that capital will continue to flow for a longer time period, which is uncharacteristic of both Pakistan as well as emerging markets. So, which was a wrong assumption. And given the fact that now that the global economy is in a shaky position and might go into a recession, and it does look likely that that flow of capital which was coming to Pakistan will pause for a longer time period. It looks quite likely that not just these two startups, but many more might not be able to survive. So yes, the cycle which we saw for a couple of years seems to have come to a pause.
And so this was a thing, right? You saw through COVID a lot of froth. I remember talking to people in the United States who would say, we're doing a funding round, and actually investors would call and email us to be part of the funding round even after it was closed. So they were literally writing blank checks, right? That money was looking for a place to go, and this was exciting. And because travel had stopped, it was all in Zoom. So due diligence that typically is in person, you hire risk firms, agencies to look into the background of people. Even in the US, that was not happening. And of course, emerging and frontier markets, including Pakistan, we saw. From your point of view, like what were the key sort of, failures, so to speak, on the investor side, right? Because this is risk capital, and investors typically, these types of investors, at least the belief usually is, are very disciplined and sophisticated in terms of how they look at a business value proposition and things like that. But clearly something went wrong. So from your point of view, what started going wrong and what point? And what are the lessons learned from this down cycle now?
To be honest, I wouldn't be too critical of both Pakistan or Pakistani entrepreneurs as well as the investors. First, we have to put in perspective what kind of capital was this? Like people who were investing, what were the objectives? Most of the people who were investing for them, this investment was similar to their investments in crypto. It was a high risk investment. Generally, as in most people who are investing, when they think about VC investment, they're aware that 95% of their startups fail. So at least the money which was coming from the US, that money was the excess risk capital, the same capital which they would put in a Shiba Inu or a meme coin. So if it goes down to zero, I don't think that those investors will lose their sleep over it. So either it was that money, or it was money of Pakistani diaspora who wanted to invest just because they wanted to support Pakistan, and B, they wanted to be involved with Pakistan. So again, very similar kind of money which you would give to a Shaukat Khanam or a Citizen Foundation. You don't really care if it goes to zero, because you're doing it for other non-commercial reasons. Yes, if it makes you a return, you're happy with it, but you just want to be involved in Pakistan. There were many such checks which were being written, and from people who are close to me and friends of mine. And and the third kind of investors who were investing, who invested in the later part of the cycle, and these were Pakistani local families. They perhaps got it wrong. They are the ones who will probably complain right now. These guys thought that this is some easy money making thing, that I invested in a startup at $1 million valuation, and 3 months later it goes to 100 million or 50 million. So so let's put some money in that. And I think these are the guys who will complain and who will have most to lose, because they really got it wrong. Because otherwise, if you look from a purely investment perspective, and as you said, like I've been investing for the last 20 years, not in Pakistan, but in Europe, most fund managers have seen, a good fund manager, you would expect him to have seen multiple cycles. So, the most famous emerging markets fund manager, his name is Mark Mobius. He used to be at Templeton, and now he runs his own business, Mobius Capital Partners. He's 92 years old. So there's a reason why fund managers are typically, you would trust the old fund manager who would have seen multiple cycles, because that he has learned his lessons.
He probably remembers the Mexican peso crisis, which many of my listeners probably have no clue about. If you don't, Google it and read about the Mexican peso crisis and what it did to the Latin American economies.
And in the case of Pakistan, most of the fund managers of VC funds were first-time investors. So a typical, I think it will be rare for a first-time investor to raise proper money from serious LPs, who like the pension funds and the serious, like the guys who look at, and they wouldn't pass the first round of DD requirements. So coming back to your question, I think that the money which was coming to Pakistan was coming because we were globally in an environment where risk taking was on. There was negative interest rates. These people have lost more money in crypto, perhaps even more money in other markets as well, and Pakistan will be no different. What is different for Pakistan is, as you rightly pointed out, that the winter will last longer, because in certain cases there was frauds, and proportionately that's a bigger portion of the overall failure compared to the overall money which is being raised. So perhaps it will take a longer time period for the same cycle to return.
So on that cycle, right? Like what are you thinking or seeing or sort of looking at for the next 12 to 18 months? The point that you made, for example, on the sort of, Pakistani diaspora investing, thinking of this either like a Shiba Inu or meme coin, or, giving a donation, so to speak. To me, that struck as a problem, because on two reasons. One, if you're looking at it as like a meme coin type investment, you're fundamentally undisciplined. And if you're looking at it as a donation, you're looking at it as like, there's going to be no return. It's fine. It's serving some other altruistic purposes. On both those sides, it incentivizes lack of discipline on the startup. And broadly speaking, on the ecosystem, which is not great. My theory has been that the next 12 to 18 months in Pakistan will show us who the entrepreneurs are that are capable of growing with discipline, which is what startup ecosystems thrive on, right? If you're an entrepreneur that can expand and grow and take care of market opportunities with discipline, using capital very frugally, so to speak, not just burning cash, then you will thrive. Do you agree with that perspective? Like, what are things that you're looking for that says, you know what, I've been around the block long enough, and in this down cycle, perhaps we will discover some diamonds in the rough.
So you're right. I think that the businesses who have raised money, some of them will be able to change their business model, adapt to the new reality, cut their costs, and survive. That doesn't mean that the investors who put money in them will still make a return. I'll give you, you can go back other cycles, right? Like telecom. If you go back in 90s, when the telecom boom happened and Pakistan, global telecom companies entered Pakistan, those telcos, the valuations they paid, they are one-fourth of those same companies are now at one-fourth of that valuation. Then in the mid 2000s, there was a similar rally in the banking sector stocks. MCB was able to sell 40% stake in the bank at more than 4 times book value. Today, MCB trades at less than book value. So while the bank has been able to run and of course make profits and generate good returns, Maybank never was able to get the same kind of the valuation which it paid. So to answer your point, I'm confident that many businesses will be able to use the cash which they raised to make a business out of it. But I doubt that even those businesses will be able to attain the valuation at which the investors who put money will be able to generate a positive return. So hence, the person you have to blame, if any, is the investor. And as you rightly said, that finance and investment is a field, it's a discipline, right? Like people study that, they practice it, they get certification. It's actually a regulated task. In order to be a fund manager and manage other people's money, you need to adhere to certain fiduciary duty. You cannot just go and take people's money and start throwing it wherever you want, which people in the VC space were doing. I'll give you some very basic things. You don't have to really dig deep. Startup valuations in Pakistan were in dollars. That does not make any sense for a company making revenues in dollars, in rupees, cost in rupees, and profit in rupees. So if your business is in rupees, how can your valuation be in dollar? And if a fund manager is giving you a valuation in dollar, that there's something deeply wrong, dislocated with that. So you don't have to go further and dig deeper into what kind of mispricing was happening over here. So I think we need to accept that what this investment was. This investment was exactly a high-risk investment where you were not investing for 20% returns. You were investing for multi-fold returns, the kind of returns which Airlift was promising. Somebody invested at 5 million and within 6 months, the valuation went to 250 million. How can you, that kind of return you only get in Ponzi or gambling? And that's exactly what it was.
And I think the dollar point is so important, right? It's the same problem with Pakistan's debt structure, that you're borrowing in dollars to fund assets, infrastructure assets that earn in rupees. And there is a direct devaluation risk problem there, right? Because your local currency and its outflows will lead to a devaluation, which then creates it that much harder for you to pay back that debt. In this example, as you said, it's crazy for a fund manager to give that valuation in dollars. And even if they did that, I would love to see a depreciation risk or a currency risk table that they developed to sort of guard against what they were getting into, right? And if you just hold everything else constant, just in the last couple of months alone, you've lost 30-something% of your valuation just because the currency has slid, right? And I think that was, again, an evidence, as you rightfully pointed out, of investors not approaching things with discipline and with sort of like a fiduciary duty of using that money in a better manner. So I think I agree with you that has set in. Where do we go from here? Because one perspective, again, that I've been sort of thinking about and would love your thoughts on is that in this downturn, actually, you can build sort of the foundations for the next upturn, right? That something better can be developed. What would you like to see happen in Pakistan's startup ecosystem and the technology sector at large, whether on the investment side or on the entrepreneur side, that gives you confidence that, hey, 18, 24 months down the road, when things ease up again a bit, hopefully earlier than that, that we perhaps have a better, more disciplined ecosystem that can grow further?
Yes, great question. And I think to a certain extent, the investments, the stories like Airlift, they have benefited the real ecosystem. Yes, investors will lose all money. They have lost all money. Yes, the same investors won't invest again. Yes, even in other startups, investors will probably lose money. So the VC funds which were set up will probably never won't survive this cycle. But they actually did invest this money, which helped train people. And we have a young population. We need to train them. So the Airlift alone had 1,400 people, which is benefit to the ecosystem, because now these guys will go to other companies which would be doing better businesses, raising money at perhaps more real valuations. So collectively, any money coming into Pakistan and getting invested over here is good for the ecosystem. And then these guys have, because of the startup capital, the likes of Google, Amazon, Facebook, they're working more in Pakistan because a lot of this capital flew back to them in terms of payments. It has also put Pakistan on the map of larger technology companies who have started hiring people from here as well, and who might in the future might also open local offices, and eventually might even acquire local startups, the second wave of startups which might come. So I think that from that perspective, we should certainly celebrate. And there's a school of thought which is saying that we should celebrate the failure of the startups. And I think that's true. We should celebrate that. And if it was a folly of the investors, that certainly is a folly of those investors. It's not a folly of either the entrepreneur or the people working in those companies. And in the West, in the global financial systems, regulators don't care if a few thousand people lose money by speculating in meme coins or in Shiba Inu, or just like they don't care if people lose money in gambling. It's the fault of those people. And maybe they had a lot of money to burn. Certainly they had a lot of money to burn. These investors in VC companies were not people who were whose wealth would be really damaged if they lose like $5 million, $6 million, or $10 million. So for the overall ecosystem, I think whatever happened in the last couple of years is good for Pakistan.
And I think the two key points here that I want to go a bit deeper into perhaps is this cultural issue that I think we have in South Asia writ large, including in Pakistan. India has changed a bit in the last 10 years or so because of its own burgeoning ecosystem itself, is that there's a taboo associated with failure. Whereas if you're in innovation or doing anything related to innovation and research, failure is a good thing. It teaches you a lot more than success does, right? And that's why in the US, for example, failure is not looked down upon, and highly innovative societies don't look down upon failure because they say, okay, what did you learn? Can you be better next time? And risk capital will be given to you because that is the experience. Failure is the best teacher, so to speak. Do you see this changing in Pakistan in terms of this cultural phenomenon that we are a bit hesitant to embrace failure as a society? Do you see it changing anytime soon, or are there any green shoots there? Because to me, I think that's the biggest barrier to innovation, is that if we're not able to embrace failure, then innovation just does not happen.
Yes, and I'll give you a more complicated answer than what people would think. So the startup community, when we talk about startup community in Pakistan, it's a combination of VC investors, overseas Pakistanis, and local investors and local community. So it's not just local Pakistanis, because the startup community is connected through WhatsApp channels and forums. So it's actually a global community. Hence, it's three different cohorts, similar to what we spoke about earlier. Now, the overseas Pakistanis living in San Francisco, living in New York, London, Singapore, those guys who invested, for them, a big reason was altruism. And I think those guys will not really, they will probably celebrate even if they've lost money. They'll be fine with it. Similarly, the VC investors who invested from outside of Pakistan, they already were cautious. They were perhaps they were aware that the chances of success were less than 5%. So again, they will be fine with it. But the local investors, the local families who invested, I don't think they'll be too happy with it, and I don't think that one should expect them to celebrate the failure and move on, because and it's not Pakistan specific. I think it's an Asia culture. You don't lose people money. Um, um, even our laws don't allow it. If you lose money, you can be held accountable. Um, there's no protection as a loss of a company. The directors of companies are often personally liable for losses and business losses, according to the laws. So I don't think that will end. I think that will be a big challenge from this cycle. Um, and yeah, I think that's something which messes things. If had this only been overseas capital, overseas Pakistani, overseas VC investment, then perhaps the damage would have been lesser. But it isn't just that.
And that brings me to the second debate I've been seeing on social media. There have been stories about the fact that some investors, probably local ones, are asking for a forensic audit. Some people are saying regulations must be tightened, and some people have jokingly said, is it a NAB inquiry or an FIA inquiry, etc. To me, that sounds a very dangerous spot to go on, because as we've been talking about in this conversation, this was high risk capital. You are investing in a startup, you better know that 9 out of 10 investments go bust, and you're looking for a 50x multiple on one. That makes your day essentially, right? Or makes your entire portfolio moving forward. What's your take on these calls for tighter regulations and more sort of like onerous requirements from the policymakers on, oversight of this ecosystem, and the calls for that? Where do you stand on in terms of making this argument? Because to me, it seems like that's the best way to destroy this entire ecosystem, because you're going to have onerous regulations, much like the rest of the economy. And then that means that compliance burden is too high for innovation to take place.
Yeah, it's a tough one. It's a tough one. And you're right that the same people, when they lose money in crypto, they don't go and complain, right? It's not that, and most of them did invest in crypto. Like 20 million people in Pakistan lost money in crypto, but we haven't heard calls from them that, I want my money back, or I want the regulator to interfere. On the contrary, perhaps when crypto starts again, these guys will go back again in that. But these were businesses, these were local businesses. There was no oversight on them. They lacked corporate governance. And there were excesses because it was easy capital. So there was a misalignment or perhaps lacks of different expectations. This will come to haunt, this will create a problem, as you rightly pointed out. And one group of investors thought they were investing in private equity while they were investing in VC. So unfortunately, there is no easy answer to it, because on one hand, you should hold fraud accountable, right? Like, you should hold corruption accountable, and that's the overall theme generally of the society in Pakistan. But I think a fraud would be held accountable anywhere, even if it was in the US. Elizabeth Holmes was made accountable, and people didn't say, "Oh, just forget about it. Like, she was a startup. Let her do her innovation." So
even Elon Musk is being held accountable now in a court of law for his violation of what Twitter is saying was an agreement, right? So if we extend that same argument, we could say, well, he wanted to do a deal and he walked away, so what? But he broke certain laws in terms of contractual obligations that he signed on. At least that's what Twitter is alleging.
Yes, and my fear is that if you don't hold them accountable, then in the next cycle, it's the same guys will similar. It will encourage more, this the same kind of behavior. So perhaps some kind of discipline is required, whether it comes automatically by natural selection by in the market, or whether it's done by some kind of legal. Unfortunately, in Pakistan, I would never encourage government involvement, or I would never encourage any kind of institutional involvement. In fact, in the past, when government used to ask me that, how can we support startup ecosystem, I used to tell them that the best way you can support is by staying away from it. But that didn't happen. They did not stay away from it. It was glamorized. The president also wanted to talk about it. Imran Khan still wants to talk about it. Like Airlift is the best example. Imran Khan tweeted about it, saying that this is an example of a great company from Pakistan. So will you hold? And then technically, you can now hold the former prime minister accountable because he encouraged people to invest in the company which went bust. So yes, it's complicated.
Yeah, it's definitely complicated, and I think it's that thing, right? Like policymakers at times are very quick to take, success has 100 fathers and failure has none. So everyone wanted to take credit for the boom when it was happening, and now you don't hear a lot about, well, what about the bust side, and then how are you going to deal with this problem moving forward? You mentioned something interesting in that comment as well, Ali, was that if there's no accountability, the same people may come back, or it incentivizes bad behavior moving forward, which, I would love your thoughts on. How should investors, particularly investors who don't fully understand Pakistan and its cultural and economic dynamics, especially those abroad, how should they think about doing due diligence in Pakistan? Because to me, there are a lot of investment opportunities in Pakistan. It is a great place to do business if you're looking for good returns because of the structure of the economy. But it's not an easy place to do business, which means that you, a lot of times, as an investor who doesn't fully understand the market, doesn't do proper due diligence, sort of end up with scams, basically, right? How should an investor approach investing in a market like Pakistan based on your experience, and what are some of the best ways to do due diligence in this market, given that you use at times information asymmetry is involved?
So great question. The problems which we are talking about in this cycle are no different from the problems we saw in all the earlier cycles in investment, not just in Pakistan, but in any emerging market. So, we could have been here in 1999 talking about the failure of Morgan Grenfell Fund, Morgan Stanley Pakistan Fund, JP Morgan Pakistan Fund. We could be sitting over here in 2008 and talking about the failure of Dalton Strategic Pakistan Fund, Barrage Overseas Pakistan Fund, or in 2017 talking similar about the fund which OPEC backed. So in each of the cycles, the failure has been that. And it's an institutional failure, it's an incentive failure. Because Pakistan is not a big market, typically the fund managers who end up raising money for Pakistan funds are typically first-time fund managers who have no experience in fund management. Because if you want to run a $50 million Pakistan fund, the economics on that is not worth the time and effort of a larger asset manager. So typically what happens is that if you are in an asset management company, the senior fund manager would be looking at larger markets, and the young guy would be assigned to a small market like Pakistan, because if you're charging a 1% fees on a $50 million fund, that's not big enough economics for any serious investor to do that kind of work. So unfortunately, we end up with fund managers who have little experience. This is exactly what happened in this cycle. Most of the VC funds, they were first-time fund managers who had no experience, very little experience of both Pakistan as well as of knowledge of Pakistani business cycles. So hence the output which happened was exactly similar to what happened in 99, in 2008, in 2017. And if we get the same thing back again in the next cycle, I think the same thing will happen. How can we solve it? And in the same way, how global LPs, global asset allocators, globally solve for this problem, which is that they only give money to investors who have experience of a certain duration. That's how it works. Like, anywhere, a first-time fund manager would always struggle to raise money, which is why typically a first-time fund manager ends up raising money from friends and family, which automatically means the chances of failure are much higher.
Yeah, and I think it's almost like survival of the fittest, right? So if you survive the 99, 2008, 17 cycle and now 2022 cycle, that should allow you to get even more money because you have a track record of saying, hey, I understand this market and here's how we approach it. And I think even for the junior fund managers, perhaps some humility is warranted, right? To listen to those who have been around the block for a longer period of time and sort of, sit closer to them and get advice and input. And times that doesn't happen as well, because there's just a dog eat dog world sort of mentality to some of this as well, especially when there's a upcycle, and that creates a problem. Last question for you, Ali. This has been wonderful. And before I let you go, wanted to ask you one thing I've noticed in my generation, right? I graduated undergrad in 2010. My classmates, so to speak, in Pakistan and abroad, wanted to, if they were returning to Pakistan in this instance or were in Pakistan, would want to work at Standard Chartered, Engro, Unilever, Procter and Gamble, like blue chip companies, right? Nice job, good benefits. They would have a good recruiting cycle, etc., good management training programs, all of that. What I see now in sort of the next generation, including with my cousins and others, the younger people that I know in Pakistan, they want to be entrepreneurs and they want to sort of take things into their own hands, build something themselves, disrupt, and all of these things are catchphrases, but it is a shift in mentality as well. Which to me is great, because we need disruption in the economy of Pakistan, because it's a very stagnant rent-seeking economy. But you also need these people to understand that there are certain keys to success. So would love your thoughts on what would you tell younger people who are either aspiring to be entrepreneurs or want to be associated with high growth, high risk companies because they see a better path forward for their careers and for their own profession in that. How do you succeed? What would you tell them in terms of thinking about being in this space long term, not just for a couple of years?
Unfortunately, my views will be very different from the popular views. So,
which is why I asked you this question.
You'll make me very unpopular. I'll lose a lot of LinkedIn connections. You'll probably get trolled on Twitter. But I think the part of the answer is in your question. You mentioned in the end that long term rather than short term. So persistence is really important. Same thing what we were discussing in the earlier question, that if a fund manager can survive this cycle and not give up and leave and go back to America or wherever he came from, then they have a better chance of surviving. So, but typically this doesn't happen. It hasn't happened in all the earlier cycles, because in all the cycles, the offshore money was managed by an offshore guy, either a Pakistani who was abroad or a non-Pakistani. So what happened is, as soon as the cycle ended, he got redemption, he or she got redemptions, they closed the fund and moved on and did something else after that. And I fear that for many people, the same thing will happen, because it won't make commercial and economic sense for them to wait for the next cycle. The next cycle might come after 10 years, it might come after 5 years. So that's the problem. And that's why typically most LPs, they invest in asset management. They give their money to large asset management platforms who have a longer history. So not only they don't back the first-time fund manager, they also don't back first-time asset management companies, which is why globally what you have seen is the top 5 asset management companies have become trillion-dollar asset management companies. So there has been a massive consolidation in the asset management space, where BlackRock, Vanguard, Fidelity, Alliance Bernstein, the top 5 ones, have trillion-plus assets, and smaller asset managers have died down. So whatever we are talking about in Pakistan is no different from globally. Now, coming to your question in terms of how should people plan their career and whether they should jump into entrepreneurship for creating disruption. One thing that they should always remember is that creating disruption, by definition, disruption means going and disrupt something, like taking something away from somebody and taking it for you. Now, in a country like Pakistan, that's very difficult and might also be dangerous. So it's not just difficult, it might be a wrong thing to do. And as a startup founder, do I really want to go and disrupt a bank? Do I really is that even rational or possible? Can I, if I'm doing something, a business in, let's say, packaging, can I go and disrupt Syed Babar Ali and his empire? Can I disrupt Mia Mansha in his domain? I will not bet on that, unless I have more money than they have, and unless I have more connections than they have, and unless I have stronger partners than they have, which I would suspect that most startups won't have that, even if they are, even if they have the top VC fund investor from the US. So expecting that you can disrupt requires a lot of hubris, which was, of course, the problem which has led us to here. So, which means that doesn't mean that you cannot do business. Of course, that means that your business needs to be collaborative. That means your business needs to be supportive and extending whatever these guys have created. But that first means that you need to understand what these guys have created. You cannot just graduate out of university and say, I'll do a lending business because these banks are all stupid because they don't know what they're doing, and I without any experience and without any knowledge, I have something which can make me disrupt the banks and destroy the profit pools which they've created. And then I think the investors who believe in that have I don't know what were they smoking. So the same for every single sector. If you think that you can disrupt the large logistics company in logistics, I think that you might be on the wrong path. It might be better first to, yes, if you have worked in that sector and you have certain knowledge, you have certain technology, you have certain IP, you have certain differentiating factor, a competitive advantage, which allows you to do something better than them, and hence you can disrupt them, then of course you should go for it. But unfortunately, what I saw in Pakistan was, startup founders with no technical knowledge, with no IP, with no patents. How many patents has Airlift filed for? They had 1,400 engineers. What's the technology they made? So if you look at Israel, you look at the US, the foundation of their startups, even look at Google, the base was made on a technology innovation and IP which they had developed, which gave them the competitive advantage, which helped them gain market share compared to larger and disrupt larger companies. Disruption was not built on just having more money, because again, there was a lot of hubris that the VC investors thought that they have more money and the locals family don't, and then that was just very, very naive. VC investors coming in with $30 million and thinking that that's a lot of money because Pakistan is a poor country.
No, this is awesome. Yeah, and also I think the hubris part is so on point, right? I remember having some conversations with folks who wanted to, let's say, disrupt retail, or wanted to disrupt banking by providing small business credit, right? And then I would ask them, I would be like, okay, are you in Karachi? Oh, no, I'm in Lahore. Okay, if you're in Karachi, have you spent a month in Jodia Bazaar looking at gray-haired, shadowing gray-haired Seths in terms of how they do business, or going to an Anarkali market or Kapda market to understand how SMBs work? And the answer would be no. And I'm like, then you don't understand the market you're trying to disrupt, right? First, you have to understand, there is something to be said about a Seth in Anarkali who spent 40 years and before that learning from their grandfather and their father on how to do business and surviving the ebbs and flows of Pakistan's very volatile economy to be rich, right? And you have to have some humility there to say, okay, there may be some gaps in how they're doing business, but if they survive for 60 odd years in that bazaar, which is hyper competitive, they must be doing something right. And so let's learn from that, right? But if you haven't gone to one of these small warehouses to understand how they guard against theft, you will have what the Airlift story told us, right? That people were buying cheap iPhones and selling them in the electronics bazaar for a nice profit, 5,000 rupees or whatever that number was. So I think that hubris is a big problem. And I think you're absolutely right on the second point as well, that the first place of innovation has to be technological. What is your IP that is so unique that, you can change the course of business in your society? And that creates a moat. And if you don't have a moat, and if your moat is essentially running negative cash margins, gross margins, then anybody can do that. The guy in Jodia Bazaar will if that's what you want to do, go for it. We'll see 20 years down the road who survives and who doesn't, right? And I'm glad that you were blunt and honest in sharing that, because I think a lot of people don't sort of communicate that out. And realize that Pakistan is a big economy. Its bazaars are very competitive. And if you want to, disrupt and engage with that bazaar, first understand how that dynamic operates. And we sort of write that off for some reason. But Ali, this has been a fantastic conversation. Thank you so much for your time. We'll probably have you on again to talk about the broader economy at some point, because that's something top of mind for both you and me. But thanks for sharing your perspective on the startup ecosystem, and wish you all the best.
My pleasure, and thank you for calling me.
Thank you.